In this video, we will discuss how to minimize taxation of your Social Security benefits. I'm Kirby Arcundiff. I have a Ph.D. from the University of Illinois at Urbana-Champaign. I'm a chartered financial analyst and a certified financial planner. I'm currently a retirement strategist and portfolio analyst for FIFA, and adjunct professor of accounting and financial management at the University of Maryland Global Campus. Taxation of your Social Security benefits is based on what's called a combined income. The combined income is your adjusted gross income from your 1040 form, plus any non-taxable interest you have received, plus 1/2 of your Social Security benefits. If you file a federal return as an individual, meaning single, and your combined income is below $25,000, you will probably receive your Social Security benefits without having to pay an income tax on them. If you are an individual and your combined income is between $25,000 and $34,000, you will probably be taxed on 50% of your Social Security benefits. Otherwise, your taxation will be half of what your normal income tax level would be. If your combined income is more than $34,000, then your Social Security benefits will be taxed at the maximum 85% of your normal tax rate. If we look at this data graphically for an individual or single tax filer, we can graph the marginal taxable fraction of Social Security benefit on the y-axis, ranging from 0 to a maximum of 85%, versus the combined income on the x-axis. We see that for a combined income ranging from 0, again up to $25,000, Social Security benefits are tax-free. Between $25,000 and $34,000, they are taxed at 50% of the normal tax rate, and above $34,000, they are taxed at 85% of the filer's normal tax rate. One of the things a retirement strategist can do is during your retirement attempt to manage the other components of your combined income along with your Social Security to try and keep you in one of these lower brackets. Depending on your other sources of income, a strategy could be to do Roth conversions of your retirement money before collecting Social Security, or in many situations you may want to go on and collect Social Security but do a Roth conversion up to the top of your current tax bracket. These are some of the strategies that you can explore by talking to a retirement strategist at FIFA. If we continue this graphical analysis for an individual making $24,000 in just Social Security income, if they have no other taxable income, then again they will be taxed at the 0 rate. As we add in their other taxable income and look at the taxable fraction, it gradually increases, maxing at 85. Again, in this case, we are looking at the total taxable fraction, or your total tax divided by your total income. So the last one was a marginal tax, and this is a total tax, which goes up drastically, and then maxing out again at 85 as the maximum taxable fraction of your Social Security benefit. Again, one of your objectives in retirement planning is trying to keep this fraction as low as possible for someone with your income sources. For joint returns, you have a little bit more of a lower limit to taxability. If you file a joint return and you and your spouse have a combined income that is below $32,000, your Social Security benefit will probably be tax-free. If it is between $32,000 and $44,000, now you will have to pay taxes on your Social Security benefit up to 50% of your normal tax rate. And if your combined joint income is $44,000 or above, 85% of your Social Security benefits may be taxable, or expressed another way, you will pay income taxes at 85% of your normal rate. Married filing separately is generally the least favorable way to file your federal income taxes return. If you do this, they do penalize your Social Security benefit, and you will probably always be taxed at 85% of your normal tax rate. So how, again, do we minimize your Social Security taxes? We do this by managing and minimizing your combined income, or shifting your combined income from one point in time to another. You need to decide when to start to receive Social Security benefits. Again, if you have a lot of money in a qualified IRA or a 403B or a 401k, then you might want to start shifting that money into a Roth account and pay the taxes on it now, and then delay your Social Security benefits to a later date. If you don't have that, you might want to take your Social Security benefits early, and it is common for the investments that you will make with that money, even if you don't spend it, to give you a higher rate of return than Social Security will by delaying your Social Security benefit to either your full retirement age or 70. We will explore these details in another video discussing when to take your Social Security benefits. Another thing you can do to minimize your Social Security taxes is retire in a tax-friendly state. There are states without any income tax. These include Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. There are other states which are friendly to retirees, and they do not tax your Social Security benefits. Alabama, Arkansas, California, District of Columbia, Hawaii, Indiana, Iowa, Kentucky, Louisiana, Maine, Maryland, Michigan, Mississippi, New Hampshire, New Jersey, North Carolina, Oregon, Pennsylvania, Tennessee, and Wisconsin. There are also various states that are friendly towards not taxing other forms of retirement benefits, which we can, again, explore at a later date. If you are interested in learning more about how to minimize your Social Security taxes, you can contact a FIFA retirement specialist at FIFA.org, or by emailing info@FIFA.org, or you may contact me personally at kcundiff@FIFA.org. If you wish to read further on this topic, I again can recommend you go to FIFA.org or to the socialsecurity.gov site, which has a lot of information both on how Social Security is taxed and on general Social Security information, including the history of the Social Security system. I can also recommend you go to the Tax Foundation site, which discusses issues such as the states that do and do not tax Social Security benefits. You can also go to my YouTube channel listed below, or you can just search for my name, Kirby Cundiff, on YouTube. I thank you for watching this video.